Hello, it's Thursday, February 28th, 2019. I'm Steve Houston with Compass Communications, and I'm here again with Joe Terrell of Terrell and Company, and we're going to talk a little bit about the markets and investing. And Joe, we're closing out the first 2 months of 2019, and the market's up, at least the Dow is, about 10% this year, and that's after it tanking over the last 2 months of last year. What do you see is going on right now in the markets?
It looks like we're going to get a trade agreement with China and the United States. And consequently, the concerns there were last year, we're not going to get a trade agreement and it's going to cause a worldwide recession. Those concerns have faded. We don't have a deal yet. They're now talking maybe we'll have something by the end of March. But more optimism in that area is what caused the market to maybe rethink itself and see prices come back up. In our opinion at Terrell and Company, even if we don't get a trade agreement, it's not going to send the world into a severe recession and see interest rates plunge to zero like the market was assuming, particularly in December of last year.
Okay. Well, let's talk about value stocks. So last time we chatted about SunTrust, a stock you had, and a value stock, and it is being acquired. And it sure does seem like an awful lot of value stocks are up for acquisition. And then over the weekend I see where Mr. Buffett of Berkshire Hathaway is looking at his portfolio and said, man, last year was the worst year he had. And he's a big value stock guy. So what is going on with value stocks?
Okay, it's a fascinating time to be in the investment business because we have seen value stocks really for the last 5 or 6 years do nothing. And so maybe our viewers want to know, well, what do you mean by a value stock? We're talking about companies that maybe only have 3 or 4% growth, but on the other hand, they're paying nice cash dividends, they're buying back stock, they have solid products, a Coca-Cola, a Procter & Gamble, American Express, some of the bigger banks, some of the chemical companies, all fit into that category of good companies generating lots of cash, but not growing at 15 or 20%. The market in the last 5 or 6 years has ignored those stocks and wants to buy growth at any price. And they're ridiculously overpaying for companies, many of them that don't make a penny and don't generate any positive cash flow, simply because it's one of those times where, no, I want to buy growth. And the value stocks are now so cheap, if you will, many times at 8 times earnings, 10 times earnings. If Wall Street doesn't begin to appreciate those stocks and bid the prices up, private equity has been very active buying up value stocks, buying the entire company. They're buying each other. Just in the last couple of months, you see Bristol Myers trying to buy Celgene, which is a very cheap value biotech stock. Seeing Gold Corp, a gold mining company, the stocks are as cheap as they've been in 15 years. Attempt or a takeover by Newmont Mining. Now American Barrick Mining's trying to take over Newmont. You've seen SunTrust, as we mentioned, get a takeover offer from BB&T. So in our opinion, these stocks are very good investments right now, because if Wall Street doesn't run the price up, somebody's going to come in and pay you a premium and try and buy them out.
Okay. So given all that we've discussed, Joe, how are you fine-tuning your portfolio over the next several months?
Well, we're starting with the macro premise that the world economy is going to do just fine. The United States economy is going to stay strong. The consumer is in great financial condition all over the world. Central banks all over the world are still very easy on credit. Those are things that lead you to believe that the world economy and the United States will stay strong. Predicated upon that, we believe interest rates are not getting ready to go down to zero. So we are still structured for higher interest rates. Will continue, which later in the year, I think we'll see the world going back to talking about quote unquote normalizing interest rates, which means bring them up in the United States, maybe another half, 0.75%, bring them up in the world, maybe about 1%. And then what you and I talked about these value stocks, day by day, if some of these value stocks stay at these prices or go lower, we'll continue to be a buyer of these companies. The cash flow generation is too good to ignore, and if Wall Street doesn't appreciate them more, you'll continue to see buyers come in to buy the entire company, and you should get a premium when they buy you out, as we did with SunTrust and got a very nice premium.
Okay. Thank you, Joe. That's Joe Terrell, founder of Terrell & Company, independent wealth management with $700 million in discretionary assets under management. Joe, let's revisit in about a month when hopefully it will be warmer and we'll be past winter and spring will be out, the birds will be singing, and everything will be a little bit better going forward.
I'm all for it.
All
Thanks,
right.
Steve.
Thanks so much.